Hi everyone, Mike DelRose Jr. and my partner Bobby McShane here with the DelRose McShane team of Coldwell Banker Realty. We were joking around a couple minutes ago, but we actually have some terrible news that kind of killed the mood. And this comes out of the lending industry and Fannie Mae and Freddie Mac. If you're not aware, Fannie and Freddie are quasi-government entities, and what they do is they purchase mortgages from banks on a secondary market, and that provides liquidity into the market so that banks can continue to lend. So essentially, you get a loan from your mortgage broker, they're going to sell that loan on a secondary market, and now their institution has more money to lend to a buyer like yourself.
Yeah, so there's always changes with their guidelines, and there's been a number of those since the unfortunate events, Surfside, Florida, the collapse in 2021. So there's been um, some growing pains with those with associations that have had a lot of deferred maintenance and haven't kept up with those things, and in turn, those associations that haven't been budgeting or taking care of those things, buyers haven't been able to qualify for conventional financing in those. Now, I can say a lot of those now over the last couple years have come into compliance and started to do so, which has been helpful. But there's been a number of associations that were unwarrantable and couldn't get conventional financing. That wasn't the problem going back a couple of years. So, um, one of the things too that's changing where we might see a similar pattern of some potential issues over the next couple months and into next year. It's one of the things that um, Fannie Mae and Freddie Mac allowed for certain buyers with higher down payments, typically like investors with 25% or more down, or owner occupants with 10% or more down, buying in an association, that they would do what's called a limited review, where they wouldn't need to necessarily review all the pertinent financial information, reserves, and those sorts of things. That's coming to an end next week. Which means that there's no limited reviews, everything will be looked at, which honestly is a good thing to see that the associations are actually budgeting and doing some of these projects. However, it could lead to issues and expose the ones that obviously are not, and that could impact buyers getting financing. And to take it even one step further, starting in January, I believe, of next year, they're going to require to get conventional financing that associations are putting now 15% or more into reserves, whereas right now it's pretty standard across the board to be at 10%. So I can see a lot of associations when it comes to buyers getting into it could be some issues going into
Now,
next year.
Bobby, is there a limited number of units per association where this applies? What if we have a standard two family?
Yeah, so this is what I'm referring to as associations of five or more units. So a standard, a two, a three, or a four family, those aren't held to these sorts of guidelines, if you will. But above that, anything with like management companies, larger complexes, this is really going to affect those.
And you know what? This is probably couldn't come at a worse time around Greater Boston. I think there's so much condo inventory in, Watertown, Waltham, where you have larger complexes. Um, these things are coming of age. They're starting to depreciate with due to their style of construction in the 50s and 60s. You have these massive buildings that are now starting to see capital projects over and over again, multiple special assessments over a 5-year period. It's really hurting the association owners, and then they're going to add this in. So if you're not prepared for this as a condo association, you're going to have to issue another special assessment.
Yeah, either
You're
that
going to have to
or
fill your books.
significantly increase, unfortunately, the monthly condo fee. It's a little scary for some of these complexes locally that we've seen some major issues.
That's on top of rising insurance premiums. So this is not fun news to share. It's actually very concerning because I think it's going to directly impact the condo market around here. You might see condo fees, like you said, shoot up really high, and that changes how owner occupants look at them, or even investors. Like if this thing's not going to make sense financially for investors, if you can't get a good enough rent and pay all your premiums, and you're not breaking even, you might not see as much turnover. But as an owner occupant, you might be paying $300 more a month on a condo fee than you would normally, or whatever it is, depending on the size of the association. So
Or unfortunately, maybe not qualify.
yeah, which means less inventory for home buyers to actually pursue. So like Bobby said, I think this is largely a good thing long term, but there's no no doubt it's going to affect buyers in some capacity if you're looking for condos in some of these larger buildings.
I think everyone will ultimately adjust like they have in recent years. It just may be a little bit of a transition period while associations are um, updating their budgets
Yeah.
accordingly.
So if you're a home buyer looking at these condos, let's start having the conversation about what that could potentially look like. If you're making offers, we're reviewing the condo docs and budgets for these larger associations anyways. Like we want to know where the money's going is, part of your purchase. So they're largely avoidable. But we want to make sure we head that off at the pass, so to speak. So we're
Right.
not learning this, weeks into a transaction where you lose time and money and energy. And on the selling side, you want to pay attention if you're a condo owner to your association, what they're doing. And maybe now's the time to advocate for those increases so you're not forced to later. That's never easy to suggest, but at the same time, if your units are not able to be sold, well, it's going to affect the value of your own unit. So things to consider, but um, that's that. So sorry for the terrible news, but it's important news nonetheless.
Yeah, agreed. I think it's great to be, as you mentioned, proactive here and making some of those adjustments sooner or recommending to do so beforehand
Right.
for these changes.
Bobby, thank you for sharing that unfortunate news. I'm Mike DelRose.
Bobby McShane, thanks guys.
Thank you.